Everybody, this is Gabriel. So this is a follow-up video for this small group of traders who had attended the webinar of RJ and me like a couple of weeks back. So as you surely remember, I had shown you a couple of trade opportunities that were setting up as we were watching and talking through the webinar. So here we have top left, we have gold on a daily chart. So this is an S1 pattern, and this has nicely developed, right, during the last couple of weeks. We're going to get into more detail with this because it's very interesting. We've got patterns within patterns on lower time frames. So just quickly here, this is this gasoline contract on a 240-minute chart. So this was supposed to develop, it had started to develop an S2 pattern, the turtle pattern. And we were looking basically here, so you might remember, we were looking for a test or price poking its head above this midline and then another sell-off. Well, this actually never happened. We never saw this full strength coming in, breaking the midline. We saw a sell-off, right, basically. So this never triggered. Since the low, it has nicely developed, but we're not looking for every move to trade, right? So things really have to match the rules. Then this one. So here we were looking, that's the ES, the S&P future on the 240-minute chart as well. So here at that point of time, we were looking for a drop into the moving average band, the 21 and the 34 moving average band, getting a test bar, right? So this is a test bar. That's a scary sell-off bar, if you so want. This was the entry signal. So it first developed nicely. We came to a new high, and then it fell off. So this didn't develop the way it should have been, right? Our target was, as you might remember, was we can't see it anymore, but the target basically was somewhere here. Now on this 240-minute chart, this didn't work well. However, the markets are fractal, right? We actually got another entry signal, kind of a re-entry, but on a higher time frame. And this is how it looked like one time frame higher. That's the daily chart. The 2 time frames higher, we are as well here. We are in a strong trend, in a super trend. And what we get here, we get here our sell-off now, right, into the 21 and the 34 moving average band. So now we're on the daily. We're no longer on the 240. That was our 240 pattern. Now we're on the daily, 1 time frame higher, and we get another, an even better test bar, right? And this has triggered here. That's another entry signal, and this has developed nicely so far. And I'm very confident that this is going to move in overall trend direction and go to higher levels. So this has developed very nicely too here. Now here the ZT, that's an interest rate future on the weekly chart. Well, this has set up an S1 pattern, but as it's a weekly chart, well, this will take more time to develop, right? As you might remember, we need a break of this wick high, and then we go along with the stop down here. Now let's come to the interesting part. Let's come here to our gold chart. So this was the entry price here with a stop down there. I've already talked about the logic, right, behind this this pattern, and we can see how this base price has bounced off the base for a couple of times. So this once the rebreak has occurred, well, this has become a support, and we can see how the bars, how the daily bars are actually sitting on support, and how the moving averages, the 21 moving average is basically supporting price and pushing price higher. So this is developing nicely. So now we're approaching stop run levels. Well, the 200 is still kind of some resistance, but these are stop run levels, and we're actually looking for this trade idea. We want to swing trade it, right? And this is the higher time frame view. That's the weekly chart. This is the pattern. We actually want, well, this is the target of the pattern, but we actually want to trade it to new highs, that gold breaks to new highs, and then keep it as a swing trade. Now let's come back here to the daily. And now let's zoom in. let's go down one time frame from the daily to the 240, and let's have a look at what happened here, right? So on the 240, so this is the good price development. Well, we see a consolidation here, right? And this is actually an S2 turtle pattern on one time frame lower on the 60-minute chart. So this is the entry, and this is the initial stop, and it has developed nicely. It has broken the 200. And came back. I mean, test, play around with the 200. And now we have. Let's zoom in even more to the 60-minute. To the 60-minute. Just need to refresh data. On the 60-minute, we can see that a couple of other patterns. Well, another pattern has formed, which is here the which is an S1. Gecko pattern that's actually on a 15-minute. Sorry. Yeah, that's on a 15-minute. This is an S1 pattern. We see a scary sell-off, right? And then a re-entry. And just, I mean, the more scary the sell-off is, you can expect the stronger the follow-through in overall trend direction will be. And we've nicely seen this here in this example. So that's a pattern within a pattern. And right now we see a new pattern forming, right? So that's a pattern after a pattern, and that looks like an S1 pattern. Well, what is missing is we need a scary test bar, right? An excitable price action event. This is a very important element of these future systems. We need a volatility spike and a volatility increase in order then to shake off the non-confident bulls, so that gold gets into the strong hands. So interesting to observe now what's going to happen here on the 15-minute chart. That's a possible entry opportunity. And we are looking for a test bar. The test bar should actually test as well the 21 moving average. So things look good for gold. I'm quite happy how things develop. That's for me a long-term position. This didn't work out, which is fine too. Well, this might come up within the next week or weeks, and this looks pretty good on the upside. So this is it for these trade opportunities we talked about. That's a follow-up, and who knows, we might have another follow-up to come. Thank you.